So we are not as many as I thought at first, but it's not really important. And thank you to everybody. And today we're going to have this classroom about a really, important topic that we talk much in trading, is the psychological part. And we like I say often, we take all the components of a winning trading system in isolation, like the trading mindset, the technical parts, the tools of the trader, like journaling, diarying, backtesting, and in fact everything is interrelated. So you have mentors who are highly focused on one topic, and I think we have to consider all those topics not in isolation, but like an important piece in your whole trading system. Like I usually say, there is the strategy, and everybody is focused on the strategy. Like I want to have a good entry signal. I want to have a good exit signal. Everybody knows about risk management, but it's not enough. The strategy is just one of the many components of a world trading system. Okay, and today we're going to focus on that, because we say the psychological part is we say that 90% of the trading challenges is psychological. I don't know how to assess that number, but I can tell you that you have to understand how your brain works, how you can learn things, and how you can assess your weaknesses and your strength also, and how you can overcome your human nature, which is the title of this classroom. And yes, today this is the first time I co-host a classroom with a trader, which was the perceptive trader, and it is Sarah. You can see at the top of your screen. And
hi everyone.
Hi, Sarah, and she's a forex trader, and she has a website which is the perceptive trader, and she mentors traders, and she has a I would say she's highly focused on the psychological part, even though she talks also about backtesting and everything, journaling, diarying, and she has a global approach like I do. Okay, so she will share her insight about how our brain works, and she will teach us how to assess our psychological biases, and how to overcome them and find the solution, a real practical solution, in order to progress and not to remain at the same place forever. Okay, so she is going to introduce herself. I will talk also, but she will have the biggest part during this classroom, and we're going to listen to her and maybe ask question. When you have a question, you can ask it, and if it's too specific and it goes beyond the scope of the classroom, you can get in touch with Sarah after the classroom, or with me if you want to have more details and about a specific topic. Okay, so here you have a program. I want to detail it. I will let Sarah introduce herself and tell us how she see this really important topic, and how she intends to develop it. Okay.
Thank you, Florian, for the presentation. Thank you so much for as well letting me enter this classroom and share a little bit of my experience. So as you guys can see, I'm not a man. I receive a lot of messages saying sir, bro, everything like that, but no, I'm here. I'm a woman. And even though I don't take that in a bad way, I don't care. but yeah, I guess this field is more filled with the man side and the woman side for some reason. So as Florian was telling, I'm a forex trader. I specialize in the forex market, 100% committed to it. I trade already for 4 years, and throughout my trading journey, it was difficult, as you can expect. I made a lot of mistakes. I lost a lot of time with a specific thing, which is I was trying to make a specific trading style work for me, which was totally against my personality. And so I lost a lot of time trying to make work swing trading when it's not really my style. I realized I had to change. And I started to realize the importance of psychology. And that's where I started to realize of the link between trading and psychology. And I found it really interesting because I always was super interested by the human brain, the human processes and everything. So for me, it was really interesting to tackle this part. And I'm now currently working with some traders, helping them in their psychology with their facing their weaknesses, especially in trading, so they can overcome them, because most of the times the trading problems, they come from the psychology aspect. Just it is what it is. and and that's it. Like, perhaps the biggest realization of my trading was that when I realized that the strategy, it's very important. It is, but it's not so much about the strategy itself. It is the way you perform the strategy in the markets. That's what makes total difference between a profitable and not profitable trader. And that's when I started to really work and stick with one single strategy and work on my performance of it, being emotional handling and risk control, and yeah, more on those aspects. Yeah, that's it. Florian, you want to introduce yourself?
No, yes, maybe. I don't know if you. I recognize some of the Twitter profile here. Yes, I've been trading for about 20 years. 20 years, and um, I'm a swing trader. So it's interesting because Sarah is on a different market and has a different time frame, probably a different strategy, but we don't care. And all winning traders have common features, and especially the proper mindset to succeed. And I'm a swing trader, and now I mentor like sometimes I mentor not most of my time, but I mentor people that help people to achieve consistency. And like Sarah said, the strategy or the technicals is not, it can't be the problem, but you can solve it really by yourself. While the psychological topic is the hardest one. And like I say, we talk about patience, discipline, etc. And what I realized that everything can be solved with mathematics, like facts, like backtesting, assessing that you have an edge. And if you see the performance of your even in a spreadsheet, and it's an outstanding performance, you will be really encouraged to follow your rules. So if you can't measure your performance or what your edge is supposed to provide you can't really progress. We say that what we can't measure, we can't leverage it. Okay, so we really have to measure it. And I became really consistent when I deeply understood my edge and deeply understood all the components of my trading expectancy interact between each other. And after I've been backtested on hundreds and hundreds of trades, I built the highest confidence in my trading edge, which is grounded in a simple approach of human nature. Okay, so hello to everybody. So Sarah, for those who were not, we were not there at when we started, is here to with me to talk about the human nature and how it's really hard to overcome it, and to give you tips or keys in order to assess your weaknesses and psychological weaknesses, especially here, and how to overcome them. Okay, So Sarah, we will start with you, and you will tell us. And you are not disturbed by the, because do you see all the slides here or not?
Yeah, it's perfectly good for me. Don't worry.
You see to all the attendants,
Yes.
because there is
Perfect,
the window with all our profiles. Okay, so the contrast between human nature and the nature of the markets.
So guys, we're gonna start the class talking about the number one reason why the traders process is so long. Why such a long ride? Why traders take so long to arrive to profitability? And there's this misconception that in the beginning all the traders think it's about the strategy, it's about they have some difficult learning, some technical analysis, piece of technical analysis. It's nothing about that. And the number one reason why the traders process takes so long, it's merely because of the adaptability that you have to make in your brain to shift from seeking certainty to embracing certainty. What do I mean by this? As humans, we seek certainty everywhere. That's how we feel comfort. That's how we can organize ideas in our brain. And that's how we feel in peace with ourselves. And it feels comfortable to us. So our brain really tries to find these pieces of certainty everywhere around our life, in everything we do, in everything we think. And so we want to pass from seeking certainty to embrace the uncertainty of the markets, right? But before we want to do this, we want to recognize that the market is an uncertain place, right? You as a trader have to recognize that you can't predict price. It's unpredictable. And I always find surprised because I always think this is very obvious. But sometimes what seems obvious to us is not for others. And I always find it surprised that many traders think that somehow they can predict price. And so they spend years trying to working on their trading to predict price in order to find ways of predicting price and predicting the outcomes, but this doesn't happen. This is absolutely impossible. So the first step is you have to recognize the uncertainty of the markets, period. Everything can happen. Every moment in the market is unique. So this is the first step. But before we talk about how do we do this shift from seeking to embracing uncertainty, I wanna talk a little bit with you about why, as humans, we seek certainty so much. Like, what is the reason for that? Why are we always seeking certainty for everything? And the main reason of this is that our bodies as a whole, including the brain, of course, the main function is to regulate the energy, our energy of our body to all the functions of our body, being metabolic functions, being basic needs, and being learning a new skill, executing a more difficult activity. So we want to regulate all this energy that we have in our body. And our body, the way it does it, and the way it does it efficiently, is by saving energy and looking for finding ways to save this energy. And the way it does this is by turning activities that you repeat every single day into essential activities. And so it passes those activities to the unconscious side of the brain. So when you repeat this activity daily, you don't need to use more energy trying to figure it out a different response. All you do is you act on autopilot and you do everything without spending energy. And this way, our brain can actually save extra energy to use it in other activities, like learning a new skill, which is more important, or doing a different thing. And the thing is that our brain does this for the essential activities. The thing is that the same happens to our emotional responses. So what do I mean by this? Let's say that you, in your present moment, are experiencing a situation, and this situation is similar to a past situation that you already experienced in the past. And so what your brain does is really, it doesn't want to lose energy trying to figure it out, a new emotional response to that situation. What it does is it goes to the memory archive, to those folders that we have in our brain, and he goes that, he has access to that, and he searches for a similar situation that you experienced in the past, that you are experiencing in the present right now. If you already had a similar situation, what your brain does is activating the same emotional response. So what you're doing here when this happens is that the present moment that you are experiencing, it's being recalled by the same emotional pattern. And this same emotional pattern brings you to the same behavior. So you find yourself in this cycle of emotions lead to same behaviors, and this cycle is called your comfort zone. And it takes extra energy to your body for you to break this cycle, because it's comfortable to be in this cycle. It's comfortable to repeat the same things over and over again. Your body wants to save energy, so this is in your nature. So for you to break this cycle, you really have to put a lot of effort, a lot of conscious effort in it, a lot of self-awareness. And so this is why basically our bodies seek so much certainty, and it is so difficult to break this comfort zone cycle, stepping out of this comfort zone, of these repetitive behavioral patterns. And so also what traders try to do a lot is they learn skills, and they use skills that worked in the past. It worked in overcoming their past situations, past experiences, and it worked really well in the past. So what they try to do is they try to bring these ways, these behaviors that worked in the past to trading. And it doesn't work in trading. So for instance, the reason why you are successful in your 9-to-5 job or in a sales job or whatever it is, it's not going to work in trading. Trading is you have to understand that trading is a different skill that requires you to go against your human nature. And when this happens, it's a hell of a work that you have to do. And this is the reason why it's so difficult.
And I will add something, because yes, sure. this is a counter-nature world. So I would say that often I say this is the world of paradoxes. Often I say that because we will give some example about that. But yes, it's true. But you have to consider also that it's a real business like any other business, like setting up a company. I repeat, a sole company where you are the boss, you're the client, you are the accountant, and you are the salary or whatever you want, and you are your own competitor to some extent. So you have to consider it like a real business, like any other businesses. Like you have to invest, pay your the salaries, pay the bills before starting to make money. It's exactly the same in trading. You have to take losses before, sometimes before. And you need to lose money in order to make money. But in trading, everything should be different. Like people reach out to me and say, how much do you guarantee with your trading mentorship program? Can I learn trading in 1 week? Oh, man. And you think you're going to learn a skill in 1 year? A new language in 1 year? Maybe, yes, a language, but it doesn't work like this. So you have to really understand that you have first to consider it like any other business, but you have, like Sarah said it really wisely, you have to understand that everything will be a trap, for you, because the market will amplify your weaknesses and smash your strength. So you have to consider both, just to add that.
Exactly. Could totally agree with you. Someone wants to join? What I want to add is that sometimes what lengths the process of training as well is that as in trading, it's like, how can I say this? You don't have feedback. I mean, in other skills, you have some kind of progress that you can see. And even if you're learning the skill alone, let's say, for instance, learning to play an instrument or learning to play piano, you have, even if you're doing it alone, you have feedback that you can rely on. It's easy for you to understand what you're doing wrong and what you have to improve, what you're doing right. But in trading, it's you who have to establish your own rules, the rules that you're gonna be guided through. Word for me, sir. So it's really like a alone skill that you really have to try new things, to test new things. So it's difficult. You don't have the same feedback that you have in other skills. And so the big question here becomes, how can you pass from the trader you are now to the trader you want to be? How can you pass from seeking certainty to embracing the uncertainty of the market? And there's three things, guys, three things that is the base of the whole work in trading. The first one is knowing yourself. You have to know your beliefs. You have to know your flaws. You have to know your personality. You have to know the good habits you have, the habits you want to break. You have to know the strengths and weaknesses of your trading. You have to know yourself. The second thing is you want to know what a profitable trader looks like, because you want to know how to bridge that gap between what you are now and the trader you want to be. So you really want to know what the habits of a profitable trader look like, everything like that, so that you can know what you need to change, so that you can bridge that gap and become a profitable trader. And it's essentially the work around these three things. That's it, guys. I'm going to pass the word to Florian now.
And thank you very much. Do you have any question? I think you can talk if you want.
There's a lot of...
You can, you want the...
Yeah, it's great if you intervene, because this classroom is for you guys. It's for you. So yeah, it makes sense that you take every doubt that you have.
Okay, you're too shy. No? Yes? Okay, we understand. But you are not with your professors, and you can share your insight, and there are no bad questions, okay? And yes, I'm a little lost with all those screens. I'm not really good in the computer things, but well, yes, it's a good summary from Sarah, and a good introduction. So we have to assess our weaknesses, to assess that the market is a different universe, and we have to assess that the market is the world of paradoxes. And well, we don't talk that much, I see in books or on Twitter, on the mass psychology. We much of the time talk about the proper mindset to develop in order to be a consistent trader. Yes, it's true, but if you don't understand that the market is just the print of mass psychology, you will not be able to understand how you have to change on how you have to you know, to some extent manage your emotion. There are three main emotions. There are fear, hope, and greed, and it's what I talk about when I talk about individual psychology. Is the three-head hydra. It means that you know, the hydra was a monster from the how would you say in English, and then a myth. And when you cut his head, it was growing up another one. Okay, So it's an endless your struggle against your fear, your hope, and greed. The fear of losing, the fear of missing a trade, the famous FOMO, the hope that you will recover from a loss because you don't have a stop loss, because you think that this is the trade of the century. So you have you are highly leveraged and you put twice the position you should have put on in the market, and you didn't put a stop loss. And if you put a stop, you did not accept that you could lose at first. So I'll talk about experience, personal experience. I used to do that. I had a stop, yes, but when the price of my stock went from 10 to 11, for example, and my stop is at 8.5, I just shift down my stop. Why? Because I was sure I would win. Okay, so if I'm sure I will win, I didn't accept that I could lose before entering the trade. It's why when you enter a trade, you must understand that you will lose that amount of money, like 1% of your trading capital. There is a difference between thinking you have a risk management because you only have a stop loss and shifting your stop or having a too much position size. And you will be successful, starting to be successful if you accept, like Sarah said, that you're in an uncertain world and you don't know the outcome of each individual trade, even though you can know the outcome of hundreds of trades. It's what we call, like in the casino, for the casino, an edge, a statistical edge. Okay, so the fear, hope, and greed. Fear, we know it. It's the fear of losing money is the second fear for the human being after the fear of death. Hope, like I said, we hope every time in life. It's legate to hope, but in trading there is no hope. There can be fear, but your fear you can control. Your fear if you have an edge, if you have backtested it, and you hope you can also control it or get rid out of it. If you really understand that hope is outside trading, hope will kill you even more than fear. So greed. Yes, greed. It was a big struggle for me. Greed, because you earn, you have 100% performance on that stock, but you want more. You want more. So you wait. You don't take your. Yes. Someone wants to talk. Okay. My English is not so good to speak. Did you hear me? Don't. Okay. Who wants to talk? Sorry.
Can I speak? Can I talk?
Yes. Come on.
Oh, thank you very much. Sarah, thank you too. I really appreciate. I've been following on Instagram, both of you, and your quotes, your tweets, and everything has been changing my life. I really do appreciate. So my question is in regards to consistency. Now, with you, like Sarah, she said that we look for certainty in the market. That is one of the biggest problems we have. So if this market is all about uncertainty, now when you relate it to strategy, do we really need a certain strategy? Like if there is a winning strategy, definitely there should be a losing strategy. So what role does this strategist of uncertainty plays in the market itself?
Sarah?
So if I understood, is that your question is what is the role of the strategy in an uncertain market? If you can repeat just the part of the question.
Yes, I think it's that.
If there is a winning strategy and if there is also a losing strategy, what role does a strategy plays in this uncertainty of the market? So I'm not trying to answer it, so it's just a question. Thank you.
Okay, so why do you have this strategy in the market? In the uncertain, what is the?
No, I think
the market is full.
I will give an answer to what I understood first.
Strategy. Why?
Yes. Let me give me my answer. Okay. I think I understood what you said, and in fact, what do we need? Why do we need a strategy? Because the strategy must be grounded in something we know. In fact, if I understood what you said. So how we can use efficiently a strategy if we are in a world of uncertainty. No, it's not opposite. Like, oh, a casino is sure to make 2.5% on every bet in the blackjack. Okay, and how come that they spend $4 to $5 billion to build a casino in the middle of Nevada desert? You know, when they don't know the outcome of each single bet. You know what it is? This is mathematics. Those are probabilities, and you can't be sure that if we toss a coin, that I have 1 out of 2 chance to go on one side of the coin like you. But if we play only 5 times, I can have 4 times the same. I don't know. Sorry for my poor English, but I can win 4 times in a row. But if we toss the coin 1,000 times, 2,000 times, 10,000 times, we will reach 0.5, 50% of probability of winning, to have either how do we say in English, the coin and the no, you don't understand. Yes. So we have a 50% chance to be a winner or loser, but we need enough bets, enough tries to know and to reach this law of probability. So it's why we have to think in terms of probabilities, and it's not because you're in a certain world that you can't be certain to make money in the market. You know, I am highly confident in my capacity to make money in markets. You know why? Because I play a statistical edge, like tossing a coin and being sure that after enough bets, I will have a 50% chance to reach an individual outcome. You do understand what I mean?
Okay. Yes, thank you. Finally, please. I was using a trendline strategy, trendline bounce, trendline breakouts, and retest. So for some time, I was just losing back to back for about 30 to 40 trades. Thank God for risk management. So I decided to because from my back test, the results were great. From my back test, out of 100 trade, I could have like 60, I could have like 50. And you say with a good risk to reward, you can win if you have that kind of win rate. But in the life market, it's a whole different thing. That's why, Father, I'm following all the rules. I'm doing everything. So I decided to tweak the strategy a little bit and include price action in it. And from Monday to today, it has proven to be better than the one I backtested, although I'm still backtesting this one. So I'm asking now, is it all right to tweak my strategy, like to make little adjustments on my strategy or take out some things and put in some things on my strategy? And how often should I do that, or shouldn't I do that?
If you permit me to answer, Florian, your strategy is endless. Your work in the market is endless. You're never gonna run out of work with your strategy. There's always something to improve. As long as there is a strategy, there's always something to improve. The thing that I want to add is that when you have your strategy and you want to make an adjustment to your strategy, make only one single adjustment and test it, because you want to have reliable results. You want to know what's working and what's not working. So if you make more, let's say you have the strategy A, if you make more adjustments than one, if you make like 5 adjustments and then you want to test it, you're not gonna know what gave you what's gonna give you those results, the new results to your strategy. So you really want to like test one thing at a time to really have reliable results, like statistics about your strategy.
Someone wanted to ask a question. I saw Someone raising the hand. No?
Hi. Hi. Hello.
Yes, Thiago. Thiago. No? Hello?
Yeah.
No,
Hi,
it's
Florian. Hi, Florian.
yes. Hi.
I'm audible. I'm audible.
Oh, we don't hear you well. Okay.
I'm audible. Hello.
Yes. Speak.
Yeah. Thanks for having this session actually. And I have a question regarding fear and greed. Actually, we often heard that
Oh, no,
fear is a
no.
strong.
Oh, sorry, because the sound is not that good, and I really don't understand one single word of what you say. So, can you speak? Louder?
Yeah. One second. Hold on. Is it clear now?
Yes. But
Yes,
louder
yes.
because the sound is not that good. Okay.
Yeah. Okay. I'll try my best.
Okay.
We often heard fear is a strong emotion than greed. So why is it so? We often heard when market falls, they fall in a very rapidly, and there will be lots of panic selling. So what is your take on fear and greed? Why is it the strong emotion of fear? Fear is a strong emotion than greed.
Okay. You understood, Florian?
A little. Yes. Go ahead, Sarah.
It is asking if why is it fear more strong, if I understood, than greed?
Yes, I would say there are crashes like when the market turns south, but there is no crashes in the upside. You can't have a rising of the market doesn't rise in 30% in 5 days or 6 days. But I saw the market like we saw in 2020. The markets went going down 40% in 10 training session. So greed is less powerful than fear. Or saying that differently, fear is much more detrimental and than greed, for the reason that we are, as human, the fear protects us from dying, protects us from crossing a river when we can't swim, from crossing a road without watching if a car doesn't run over us. Okay, greed is just a luxury. Like you think greed when you have the minimum to live, okay, and you want to protect you first, and we should protect ourselves before trying to make money in the trading. It's like we say, first protect your capital, second you start thinking about making money. So greed can't be stronger than fear, and fear will kill you much faster than greed comes after. Okay, and greed is here when you still have some money in your account. Fear, you can do you can see in the during the market meltdown, even hedge funds or mutual funds have to sell their assets, and even those who are not concerned with the drop. You know why? Because they have margin call on futures on indices, for example, and they have to sell gold. They have to sell their commodities, futures commodities, and because they have they need to compensate for the loss on another asset. Okay, so fear works like in a dominoes effect, like and you can go broke in 2 days because of fear. Greed is more pernicious. It's slower, and I don't know if I give you the right explanation, but it's how I feel it. Okay.
Yeah, got it.
Okay. We yes.
Yeah, can I ask one more question?
Yes. Good.
Yeah. Why we tend to do over trading when markets are in bull run, obviously. So, how do we avoid some like whipsaw structures will generate in the market? We tend to fail when markets start falling. So, how do we avoid over trading? What is your so how do you answer for that?
Yeah, it's, I don't know if it's really it's maybe beyond the topic of this classroom. We have much to talk about, and like your question is about, I think, the strategy and the market behavior, and it's not specifically the topic of this classroom. If I well understood, so if you have a specific question beyond the scope of this classroom, I suggest you get in touch with Sarah after the classroom, or with me if you want, and we will give you more details. Okay.
Yeah, sure.
Okay, sorry. So there are many biases, like cognitive and emotional biases. There are definition, and there are scientifically proven that those biases go against us. And there are cognitive, like cognitive biases come from a wrong processing of the information we get, or memory dysfunctioning, like different biases we're going to see after. Emotional biases, like the word suggested, are deeply grounded in in irrational way of reacting to specific situation. So cognitive is more rational biases, and emotional biases are more linked to the way we can feel things in a rational way. Okay, and that those biases, there are 50 biases in behavioral finance, but we're going to talk about the 5 main biases that we encounter in our training journey. Okay, and so about the mass psychology, it's what I talk a lot about when I mentor traders, is that the contrary nature of the market. Sarah talked about that, and I have 2 examples: not sold, not lost. Like the mass psychology, and people always sell at the bottom, and they sell and they buy at the top, and everybody, the weekends, the mob, the crowd, have the a unique behavior. So you have to be rational as a trader and change how you react, because the market will never change, and it's a pure chance, because the market is still the same 200 years ago. If you can go back to the beginning of the 19th century, if you go back on the grains market, or the historically the oldest markets, you can go back to the early 19th century, 200 years, and you will see, I did it, you will see that the market is over and produces over again the same sequences. Okay, so one example: not sold, not lost. Okay, what does it mean? I buy at 10 my stock, and it goes down to 5. Okay, I don't have a loss because I didn't sell my stock. What is it? If you have a house, and which cost about was what value is $200,000, and there is a real estate crash, and you want to know the value of your house. If it's $100,000, it's worth $100,000. So it's not because you didn't sell your house that the value is not $100,000. So it's the same in the market. If your stock is now 5 and you bought it at 10, it's worth 5. Okay, even though you didn't sell it. So it's completely irrational and stupid to say, because I didn't sell, I didn't lose. And the real problem is that people, like in biases, like confirmation biases, we could talk about that. They will justify. Can you? No, it's me. I don't know. There is an echo. And what I mean is that you have to. Sometimes people lose much money. Okay. Because they thought they were the trader, and they didn't manage the risk, and now there are a 50% drop in their trading account, a drawdown of 50%. Okay, and now they're going to justify the fact that they're right. Okay, so they will say, "Oh, I'm not a trader anymore. I bought Tesla at 800 and now it's 400. Okay, no problem. Not sold, not lost. Okay, so now I'm an investor. I'm going to hold Tesla for eternity. Okay, now I justify that I didn't incur my loss and that even if I didn't protect my capital and even I had the wrong, behavior, I justify that what I did wrong was good. Okay, so it's why, because I'm talking about mass psychology. You're going to say it's individual biases, yes, but everybody, 90% of the traders or so-called traders in the market acts the same way. So if you are well prepared, you're going to take money to do who are unprepared, and you have to understand we didn't tell much about that it's a zero-sum game. So you have to understand that there are 95% of losers, or losing traders, sorry, and 5% of winning traders. It means that 95% of the traders will feed the minority of those who are prepared and know their biases and work on that. Okay, maximizing the hit ratio. People want to win as many times as possible, like 80% of the time. Yes, good. In life, it's good to have 80% of chance to succeed at an exam, 80% to meet your girlfriend, 80% to find a job, etc. So in the market, it doesn't work like this, because if you have a hit ratio, like the percentage of winning trades of 80%, it probably means that you have many small gains, and the 20% are really frequently the biggest challenge, because your losses will be far higher than your gains. So you probably are supposed to have a fragile edge if you maximize your hit ratio. But if you maximize your risk-reward ratio, like the average gain on your average loss, you probably have a margin, and you can face a hit ratio of 30%, for example. I have a hit ratio of 25%. It means that I lose 75% of the time. So it means what? I don't know. I don't say I'm good, but I think I'm good at what I'm doing, but I know why. 75%, I don't rely on my hit ratio, because I can't really go beyond 25%. I went down to 20, even 15, and still at 15, I'm winning. Okay? Why? Because I have a monstrous risk-reward ratio. So, and those are most robust system. I don't say that I'm better than you. I just say that like trend followers, they have small hit ratio but big risk-reward ratio. The first advantage you have is that you don't rely on a high percentage of winning trades. It means that even if the market doesn't provide opportunities, you are still okay. Okay. And secondly, it means that when you take a win, you take a huge win, and it means that you look really frequently at the price only. Okay. So I suggest you to read about the psychology of crowds, a book written by a French guy in the 19th century whose name was Gustave Le Bon. And he doesn't talk about trading, but he talks about the psychology of crowds. Okay, maybe because I talk much, maybe I'm going to let some of you ask questions, and Sarah can maybe answer to some of your questions relating to psychology, if you don't mind. No? Nobody? Not interesting? So I'm going to
wait. I think we have a question.
Where? Here?
Oh,
yeah.
Yes.
Thank you. I still have a question, and really, I'm happy for this session. I'm really so happy, because I've been looking for ways to talk to someone that is, because of the part of the world I am, the country I am, I don't really have connection with traders out Yeah, so I'm really happy for this. I'm really happy for this. So I want to speak in the aspect of consistency. There are common things that traders, professional traders, we see on Twitter, on Instagram. They say work on consistency, be disciplined, have a good mindset. Now, in the aspect of consistency, is it consistency in your psychology, like in the way you think, or consistency in following your strategy or rules? Because some people will be like, I can follow my strategy, everything to the T, but I'm still losing. Is it now in psychology, consistency in psychology, or consistency in the strategy? And is it possible to have consistency in psychology?
So to answer your question, it's really simple. To have consistent results, you have to have consistent actions. And it's all about this. You're not going to have consistent results if you don't have consistent actions. And if I understood, you have a very good question. So you can be following your strategy and being consistent with following your strategy. So you are consistent with your actions. And following that, you can expect consistent results. This is wrong. Why? Because you might playing your strategy consistently in the market, but if your strategy doesn't have an edge, your results not going to reflect that consistency. So the first thing is, okay, you have to have consistency, which is on your psychology to act on your strategy. But if you have that consistency together with no edge, you're not going to have consistent results. And it's very important to understand that you can't rely on results to judge your performance or the quality of your trading, but you have to make sure you are playing with an edge, meaning you have the probabilities on your side. So when you couple edge with consistent actions, meaning you are playing your strategy, following your strategy, you are following a good risk management, and you are in peace with your strategy. You are one with your strategy. When you do these three things, you're gonna have consistent results, because when you have an edge, you don't know the outcome of the next trade. You know that you're going to lose and you know that you're going to win. You just don't know how those wins and losses are distributed in time. But you know that long term, it's a win. It's going to give you profits long term. So you really want to have an edge together with consistent actions, consistently acting on your strategy, and then you have consistent results. And then it's this. I don't know if I answered your question. If you have other.
Thank you. You said earlier that in order to move from certainty to embrace uncertainty, there are two things you must do. You must know yourself, your weaknesses, your strengths, what you need to work on, and then you must know the habit of profitable traders. What is their habit like, so that you can bridge the gap. Now, if I want to transform from certainty mindset to uncertainty mindset, and then I'm working with certainty attitude or certain psychology, how possible is it to move from certainty to uncertainty in the market? Why am I saying this? There's a lot out there, a lot of information, a lot of psychology, a lot of strategy, a lot of everything, that if I read like from Florian now, I read his tweet, and he just says something about mindset. Another person, it can be maybe from the perspective trader or from the insider trader, and he's just saying another thing in that same mindset, but kind of contradicts, but it's still making sense. I don't know. So now, how is it possible to work from this uncertainty, this certainty to uncertainty, given all these factors?
So it's it's basically the main question that we are here discussing in this class. I'm gonna talk later about it, but I'm gonna give you just a clue of just to open your curiosity. Is just you have to focus on what you can control, and you have to accept what you can't control. This is the main two things. If you don't do them, if you don't control what you can, and if you try to control what you can't, you're gonna fail every single time, every single day. You're not gonna see one single profit. But there are specific techniques that I'm gonna talk about after Florian is done. So I'm gonna tackle your question. Don't worry, it's a matter of time.
Okay. Okay. Thank you. And we're going to make a zoom on the main psychological biases. You know, I can give you much more than that, but and you can find that easily on free stuff on the web. So don't spend too much money buying books on that. But we're going to focus on the main. To me, Sarah can add some of those, and we'll develop after me how to overcome those biases. And so there is the loss aversion bias, which is the most the serial killer in the market, like loss aversion bias. The paradox is that we fear loss in our life. We fear losing people. We fear losing a job. We fear losing our girlfriend or our boyfriend. We fear to lose money, and the fear is among everywhere in our life. You can't deny it, and in fact. It has been scientifically proven that the impact of the emotional impact of a loss, and especially in trading, is twice as much as the emotional impact of a gain. 2.5 exactly. I don't know exactly. No, it's not exactly. It's about 2.5, and you can assess it in trading. I'm going to give you an example in few seconds. Like. It means what? It means that you don't care about when you win. What does it mean? It means that it's normal. I win because I'm good, because the market owes me something. Like my parents owes me love. Like my girlfriend owes me love, and etc. We are like children in the market. Like we were children. And we needed the love of our parents, and we need the support of our friends. And in the real world, we often I don't say every time, we often can rely on a situation, if not a person. Like you can dilute a responsibility. Even if you make a mistake in your job, you can be fired, but you can blame the other guy. So you are still have the opportunity to postpone the responsibility, or to get rid of the responsibility. In the market, you have to be 100% responsible of everything you do, and it's really hard to do, because I think I'm really curious, and I'm listening to many different people in the world with different jobs, and I don't know a job in which you are responsible for 100% of what you do. Okay, I don't know. Maybe other jobs, but even if you are a great scientific, or how do you say, a doctor, it's a team. Even if you are in the major doctor, you need people around you to help you to save the life of your patient. In trading, you're just there is only you. Okay. So what does it mean, the loss aversion bias? It's you will take small gains. The implication is that you will take small gains, like 5% gain. I talk about stocks, so I talk in terms of percentage. So I'm not a forex trader. I don't talk about pips or whatever. But it's the same example. So I'm going to take a small gains, like 5% gain, but I don't feel much about this 5%. Okay, like I say, it's normal to win, but it's really hard to bear 10% loss. Okay, especially if I don't have a stop, like the majority of beginning traders. And what does it mean? See, the paradox is that you fear loss 2.5 times more than gains, but by refusing loss, you will take more losses than if you accept to take them at first. Like we say, if you don't take your loss, you will take the mother of all the losses. Okay, so you have to. It's why, as I told you, everybody wants to maximize their hit ratio. You know, the hit ratio is the percentage of profitable trades. Okay, winning trades. Okay, so 80% of winning trades, is it good? I'm not so sure, because tell me how much do you lose when you lose, and how much do you win when you win? So I don't really care about your hit ratio. I really care about your risk-reward ratio. If you have a high hit ratio, it means that you will take small gains because you have a loss aversion biases. But maybe you will have those 20% losses will kill your gains. So because you will have greater losses because you don't accept the initial loss than your gains. Okay, so it's a big bias, and the only way to get rid of that is, if you don't do that, you will be killed or eaten alive by yourself, in fact. Okay, so take your losses, and don't over trade, and don't have the proper position size. And you know how to do that? When I enter the trade, I already lost. But what does it mean? In my brain, I have already lost. If I have already lost, I have the proper position size. But if I don't accept that I can get stopped out, 1 second after being entering my trade, I won't have the proper position size. I won't have the stop, and etc. Okay. So the implication is you have to understand what a statistical edge is. Like I said, a statistical advantage, not a statistical edge, and you're reasoning in terms of probabilities. And we said, consistency. The question about the last question about I don't know your name. A really interesting question. How to, in fact, I think I will make the summary. How can we be consistent? And even what does it mean being consistent? It means you make every day the same thing in an ever-changing environment. It's strange, no? Yes, you can. And why? Because you have backtested it. And I can say something about me. I'm full of doubts in my real life. I'm stressed out. I ask myself too many questions about life, about death, etc. But when I am in the market, I'm really free of all doubts. I'm free of any confusion. I feel in complete sync with the market. I feel like I'm controlling my life, which is not the case in my real life, I can tell you. So why? Because I am such in an uncertain world, but I have such, I'm highly prepared before the trading session that I'm now, and maybe I will, I'm never surprised by what the market does. Okay, never surprised. Okay, there are not so many possibilities in the market. The stock or your asset, your forex pair, your crypto, or your commodity future can go up, down, and remain the same. Okay, it's not that rocket science. So the second bias, I just, it's the way I class them. From the most dangerous one to the least dangerous one. Maybe Sarah could think otherwise. Just my bias and my experience from trading. And you can think that I think if you want to remind of one single bias, a loss aversion bias, I think is the most detrimental to your success. The second one is the confirmation bias, and they are all linked together, those biases. And you're looking at an information, a piece of information, or a fact, or a belief that will justify your initial decision, even if this decision is irrational and goes against you, and especially goes against your trading account. Okay, like I said a few minutes ago, I bought a Tesla, and my cousin bought the last Tesla car. And I see Elon Musk, who paid $11 billion in taxes. So I can't be wrong. Okay. So, but I see the stock that is going down, and I don't have a stop loss, and it goes down 20%. So I'm in the red, 20% in the red. But I thought it will. Your resume is upside move, and now I consider things that will justify that I will remain in my position, and then I will not take my loss. Okay, but Tesla is a good car. Elon Musk is a genius. My cousin has a Tesla. It's a really good car. Electric car is the real thing now. So I remain long in the stocks when I'm down 20%. And when I'm maybe down 70%, what happens very often with the growth stocks, with a PER of 200, for example, I will consider to take my loss. And at that point, at this very specific point, the stock will probably go up. Sorry. Why? Because everybody, the mob, the crowd, act in a harmonious way, and everybody does the same thing, irrational thing in sync. Okay, and even I remind people who are here. I've worked as a prop trader in a hedge fund, 10 years ago, and I can tell you something, that 80%, 85% of the funds do less than the market. So you'd better buy an ETF on the S&P 500 than trusting mutual fund for example. It's not me that tell that, but you can read an article about that. Okay, so the average is low. So if you want to make money, you have to understand that you have to think differently, and think differently not for the sake of thinking differently, but to know that if you don't assess your biases, you don't assess your weaknesses, how can you work on them to, I would say, yes, to get rid of them. I didn't say to get rid of your emotion. I said to get rid of your biases. And I can tell you it's really possible. Okay? But you have to work on and focus on specific point, and you can remedy, and Sarah will end this classroom by developing all the stuff. Okay? So confirmation bias, how can you remedy this? Have a systematic and rational approach. Yes, I think I'm a systematic discretionary trader. So I've developed the capacity to recognize price patterns, recurring price patterns. Okay, but it's not enough. But I'm pretty systematic because sequences are not infinite. So even though this bar is little different than this bar, this is the same big picture. And I play big picture. I don't go too much into the details of the price pattern, I say. But I love to have a good story told by my stocks. Okay, I don't look at pennants. I don't know the indicators, and because I don't know the added value of that. Okay, but it's when I talk about the technical part, it's just my thought. You can think differently. Still, maybe you will see. I will develop these two other biases, and I will let Sarah speak, because I think I talk too much. Confirmation bias, the herding bias, like it's you want to follow the mass, like in fact we are gregarian. We say in French grégaire. It means that we want to be in a pack, like wolves. They are stronger in packs. Yes, we are stronger in packs. Yes, but you got to be aware that the stock market, or the market, the financial market, is the world of paradoxes. You have to be with the pack, but you have to leave the pack when this is the time to leave the pack. So you are in a group. You must profit from the stupidity of the group, because we say, and it's proven that the mass is stupid, act like a stupid person, and you can predict the mass behavior, but with more accuracy than the behavior of one individual person. Okay, and you have to leave the pack when, for example, the stock goes up and up and up and up. You know that it won't last forever. You don't trust in you don't trust hope, like people think that this stock rocketed 100% or 200% and will still rise to the top, to the sky. No, yes, it can rise, but not to the sky. Okay, so every time you talk about biases, in fact, you have to challenge. It's what I really realized. You have to challenge your edge with facts. I hear about mindset, discipline, patience. Okay, man, yes, it's great, but I challenge you. What is your average hit ratio? What is your average risk-reward ratio? What is your average position size? What do you do when you're in your drawdown? And if the market does that, have you the plan B, C, D? No, you will be killed. Period. So what I say is that okay with mindset, okay with discipline, okay with patience, okay with psychological biases, but I'm weak. I am human, but I don't trade with emotion. So I'm not a genius, but I can tell you that if you work like a scientist on your edge, you will kill your biases. Okay, those are you can check those biases. I don't want to develop because I want to let Sarah talk about his stuff. And overconfidence bias, like his word, the name should suggest, is thinking that you are better than the others, that you're better than any hedge funds, that you know more than the average guy, and so you have a big position size. You don't have a stop loss. You won't take your gain when you will have to, etc., etc. So it's not that complicated, but you really have to understand that you have to overcome those biases. So Sarah will talk about now the link between the conscious and unconscious brain and explain how we process information.
So guys, how can we then overcome these biases that push us back in the market, that stop us from profitability? And the first thing you have to realize is that all the work that must be done in trading is you have to work with the information of your unconscious mind rather. And this is of difficult access. So we sometimes think we are so much in control, but in fact we feel in control, but of our conscious mind. So it's all about accessing our subconscious mind, and the work starts from there. There are many traders that spend years and years like trying to fix something. They know they have something to fix in their psychology and the problem is there, but they spend years just working on a surface and they don't get to the root of the problem. And that's why they are always repeating the same mistakes over and over again. And this is very costly, like time costly and energy, emotionally costly. So the first step here is that we want to access our subconscious mind, bring the information to the conscious mind so we can work with it at a conscious level. And after we have worked with it, with techniques that I'm going to talk about, we want to bring it back to the unconscious mind. So it's basically this that you want to do, these 3 stages. Now, can you just put the next slide, please, Florian? So, how to overcome these biases again? And the simple process is that you want to access what are your bad habits, what are the habits you want to change, and what are your bad responses. And after this, you want to understand what are the emotions that lead to these responses, the emotions trigger. Once you know what are the emotions that lead to the same response over and over again, you want to know what is the event, the outside event that is triggered these emotions in you. And the event is not the problem because you can't control it. The problem is the perception you have of that event. That is what creates your reality, because different people see the same thing in different perspectives. And so this is the way you access to the root of the problem, which is your beliefs and your limiting biases. And then what you really want to do is, as we talk about this comfort zone cycle, which is this, you want to break this cycle. You want to interrupt it. And where you interrupt it is right between emotions and response. So the line should be on the arrow, but it's there that you want to interrupt it. Once real time, once you are aware of your emotions at the present moment, you want to interrupt the cycle there and execute a different behavior, the coping behavior. So for instance, let's say let's say that you have a loss. No. Let's talk about you have a bad habit to revenge trading. Let's say it like this. You figure it out that the emotions you feel before are angriness, impatience, and frustration. So these are emotions that lead to your bad response of revenge trading and that bad habit. But what is the event that triggers this response? The event is your first loss. And it's not really the event, it's the perception you have of that event. So if you if you get to understand what do you think about loss overall in your life, you can understand your beliefs. If you believe that loss, when you lose, you're wrong, I assure you that you're not going to make a single penny in the market, because you're going to lose always. You just have to reduce the size of your losses. So you really want to interrupt the cycle there. Once you feel the emotions, do the coping behavior that induces you to create good emotions in yourself. And then you want to repeat this over and over again. Every time you feel these emotions, you want to do this coping behavior. And when you repeat this, a lot of times what happens is that you not gonna mute your emotions. That's never gonna happen. You're never gonna trade emotion free. This doesn't exist. Emotions are always there. What you're gonna do is create a new association. So you're gonna associate, you're gonna no longer associate these bad emotions with the event trigger, which is the loss. You're gonna associate the emotions that your coping behavior induces in yourself, until you no longer need to do this coping behavior, because you created a new association and you repeated it so much that it's already ingrained in your unconscious mind. You already made it into a habit. So this is when you become one with the habits you want to implement. And yeah, you can pass, Claudia. So now that we know the exact process that we need to follow to change our behavior, and let's talk a little bit more about the overall, how can you make change overall. And it starts with self-awareness, always with self-awareness. You need to access the information from your conscious to your subconscious mind. You need to access that information. And then it comes a determination. You need to decide what you need to change. Preparation, you need to make a plan to change. Action, you need to execute the plan. Reinforcement, you need to repeat the plan. And the more you repeat it, the more it's gonna get ingrained in your subconscious mind, which is the integration. So it's basically this cycle. Every time, in everything in your life, things that you want to change, not only for trading, it's true for everything. So you can pass the next slide, please. This is like the text. This is what I just said. As you're gonna have the presentation after the class, I wanted to keep it here. You can pass the other slide.
Not this one. I know, because you develop it. Okay.
Yes. So let's start with self-awareness. How can you have self-awareness? And straight away, the way you can build self-awareness is in your trading. Is by having a trading journal, because you can't rely on your memory to improve. Your memory is full of biases. You can't trust yourself in the beginning. You can't trust in your emotions. So what you want to do is look at them from a distance standpoint, the more neutral as possible. And you want to you want to have a trading journal for this, and you want to have in your trading journal a psychological section, and so you can make improvements. So if you want to improve your performance, you have to have your trading journal performance focused. Does this make sense? So in your journal, you can clearly see your mistakes. I mean, if you don't have a section for your mistakes in your journal, I don't know what you're doing, but yeah, you have to know your mistakes. Let's say you are repeating the same mistake in 1 month over and over again, and you have to get to your emotions. What did you experience before that mistake? You want to get to the event trigger, and finally you want to arrive to what's your perception of this event and how can I fix it? And so you really want to work on the reversed way here, so you can access your subconscious mind. The second stage is the determination phase. And here you want to make a decision. To make a decision, you need to understand what you are, what do you look like, you need to know yourself, you need to know what you need to change to become a profitable trader. And you make a decision on this. And then from the decision, you can pass the slide.
Yes.
You go for the preparation. You make a plan that you want to execute every time you identify those emotions trigger. So every time you identify those emotions, you know that those emotions are going to lead to that response. So if you know that, all you have to do is break the cycle, just like we talked about in the previous slides, and interrupt it and replace the response with a coping behavior. The coping behavior here might be different for me than for you. For me, it might be getting out of the charts, going for a walk, reestablishing my emotional balance, doing things that bring me good emotions. For you might be breathing 5 minutes, breathing technique. For others might be meditation. For others might be going play something like instrument they play. I don't know. It's different. We are different. So you really need to know yourself and know what works for you, really. And then after the action, you wanna you can pass the slide. You want to then reinforce the action, meaning repeat it over and over again until it becomes an habit. The more times you break the cycle, there's no secret. It's all about repetition. The more you break the cycle of your emotional behavioral patterns, the more you're going to ingrain it in your unconscious mind. And this is what you want. You want to implement the habits that lead you to being a profitable trader. And this is the key. This is the science behind all habits. You want to reinforce the neural pathway associated with that activity. You want to ingrain it in your subconscious mind. That's it. And that's when you become one with your strategy and you are in peace with your strategy. And so I want to leave you with an example, pretty simple one. Let's say that your problem is overtrading. You know that you need to stop overtrade. So the awareness comes, I'm losing because I overtrade. I know that. That's awareness. Then the determination is, the decision is, I need to stop entering trades outside of my strategy just to fulfill the need of being active in the market. This is determination. And then the preparation, the plan you want to establish is that every time you feel those emotions, you want to break the cycle and go do something else to reestablish your emotional balance. This is your plan. Your action is nothing more than the action of it, identifying emotions at the moment and executing the plan real time. And then you want to reinforce, which is repeating. Repeating comes with a lot of effort, but the beginning is more costly. But then the more you repeat, the more effortless will become. Suddenly, you realize that it becomes effortless totally, and it gets ingrained in your subconscious mind. And this is the goal of changing your psychology.
I just I want to give an example. It's really interesting. Yes, this what you said. This like a circle. You can be in a vicious circle. Like you said, the event has no meaning. It's the way you react to the event. When I was a kid, I was on the beach and a dog bite me and there was bleed, etc. And so I had two reactions possible. Considering that all dogs are dangerous, or thinking that there are some that are dangerous and some other that okay. So it didn't. I didn't have a trauma. I have a dog, and I don't consider it is dangerous. But I know that's in an animal. So I'm really when my daughters were really young, even with my dog was really nice and not aggressive at all. I just considered that it could bite anyway. It could because it's an animal and to some extent is different and it can have a behavior that can be strange or overreacting, etc. And the consequence can be really detrimental. Okay,
yeah.
So the risk, the reward, the risk, the reward, and I said about journaling. I have a journal like Sarah said it. I'm really in sync what she says. It's really insightful. It's I write about 1,000 pages per year, and like I said, I don't say, oh, it's good. I write so many pages. I think 90% is bullshit, but I need that. Maybe not 90. I would say 80 maybe, but I don't care. And it's my own journal, and it helped me a lot. And I would not be profitable if I had not journal, because you remember what you write and you are accountable for what you write, because it's an action. You can't see things objectively. You wrote something. And I noticed something because you said about, this circle of understanding, considering the emotion when you do the things wrong, trying to assess how to change, etc. Yes, but maybe you talk about overtrading. It was my last chance. I was able to take my winners. I was cutting my losses short, but I was too much trading. I was making about 80 trades a day when I was a swing trader. Okay, it's insane. So now I put about 10 trades per month. Okay, and it took about, when I write something, I used to write something, and I must not do that trade, not overtrade, not do that. And I really do that. It took me about 1 year and a half. Okay, 1 year and a half, because I'm pretty slow. But it means that I was aware that I had to change that, but it took me 1 year and a half on average to get rid of my weakness. And like I say often on Twitter, to turn my weakness into my biggest strength. And you know what is my biggest strength? My biggest strength now is what used to be my biggest weakness, over trading. Now I really don't care about trading or not. I just play my edge. So Sarah put it in a scientific, like a practical way, and she's so right. But don't understate your capacity at learning by layers. And I can tell you something, that when you get rid of your biases or weakness, you don't look back. You don't look back. Like you know how to run a bike, it's for eternity. Okay, I don't say I'm not. I can wipe out my account, but it's as probable as possible as being killed by a car in the road, like any other probability. Okay.
100% agree with you.
Well, and yes, anybody has something to ask to Sarah to develop, because it's really, really paramount, this classroom, if you want to flourish.
I just want to add here one thing.
Yes.
And reinforce one idea, is that in trading there's this misconception that you need to trade emotion free. You can't have any emotions running while you're trying to make a decision. Emotions are bad. Emotions are in war with your rational side. No, it's not true. Stop thinking like this. It is not true. Emotions help you decide. You just need to learn how to make new associations that go along with the trader you want to be. You want to change these associations, and it's just basically that, because it's a huge misconception that exists, and it leads you to lose time with something that is never gonna work. You're never gonna shut down your emotions. And yeah, you can't lose time there's no time. You can't lose time in trading. You have to really make your training journey worth it. So there's no time lost. So embracing market uncertainty, it's just kind of a recap of what we've been talking about. How can we then shift from seeking certainty to embracing uncertainty? And this is by putting all your focus in what you can control. What can you control? These three things: probabilities, technical edge. You want to put the probabilities on your side. You want to you control your performance, how you enter, how you handle your emotions, how you manage your trade, your exits. So your performance, you control more than you think, and you control your risk. In basically, what you can't control is what you in the beginning try to do it, and then you stay with this idea that all you have to control is price, but it's the only single thing that you can't control. You can't control your outcomes, as Florian referred. Yes, you can control the outcomes of a series of trades. Control, you know that when you have an edge, that series of trades long term, they're gonna lead you to a win, to some profit. Otherwise you wouldn't have an edge. But you don't control the outcome of your next trade. So you have to be ready to lose and to win. You have to have a plan to win, to boost your wins, and to lose. You have to be prepared. And here are some extra tips in this slide. There are some extra tips to how can you embrace market uncertainty. It's all about focusing on the process and putting your focus on the process, basically. And it's a lot about, if you want to focus on the process, you have to do things that focus you on the process. So if you want to focus on the process, but you are setting goals based on the results, if you are saying that by the end of this month, I want X amount of money with my trading, how can you focus on your process then? You can't put money goals on your trading. You don't control this. And your trading routine has to be all about your process as well. Analyzing your trades at the end of the week, at the end of whatever it makes sense for you, depending on your trading style. Journaling, writing your thoughts. It's this basically. And then analyzing your performance. When you have your journal, you do not only want to analyze your trades, but you want to analyze your performance. And it creates a great deal to write and write your thoughts. This thing that Florian was saying, that he writes a lot, and it helps him a lot too, understanding his own mind and yeah, fixing a lot of things. That's it, guys. Thinking long term.
It's okay.
If you have any questions, just turn on your mic.
So, oh, sorry, we don't hear you. Oh, I don't hear you. Are you where
Now
are you?
you can hear it.
Okay, it's
Better.
Yes.
Hello.
Hello.
Now can you hear it?
Yes, we hear you.
Hello.
Yes.
Maybe he doesn't hear us.
Hello.
Yes, we hear you.
Now can you hear it, please?
Speak on, we can hear you.
We can hear you.
Hello.
Yes. Welcome.
Hello.
Hello.
Can I ask a question, please?
Can I ask you what? Yes, a question. Yes, you can. Yes.
Actually, I am doing day trading. When I do day trading, it goes right on my plan from Monday to Wednesday. But when I go on Thursday and Friday, I can't control my mind. What should I do for that?
Bro, it's really a pretty broad question. Did you attend to all the classroom? You just arrived, no? No, if I don't no.
I arrived little bit late.
So I suggest it because this is a real broad question. You say, how do I change myself? So we can't give you an answer. Maybe Sarah, you can, but I can't. So maybe get in touch with Sarah, and maybe she will give you more details because you have to have a more specific question because we can't answer to that. So sorry, but
It's like till Wednesday I can control my mind on how to execute my plan. But after that, my mind gets out of control. I know my plan, but I get out of control.
yes, but there can be many different reasons. But I can tell you that the first step is to have an edge. You have an edge. It's not a cliche. An edge is what you have to put a spread to open a spreadsheet. You put your trades, and you see if you're on average, you have a trading expectancy, positive trading expectancy. I have a talk much about that. You have free stuff about that on my website, and maybe you get in touch with me for the first part, and after that, you will have an explanation on how to get on tracks. Okay, you understand?
Okay.
It's a too broad a question.
I
Okay.
have a, I
Okay.
have a
Okay. What's your Twitter account name so that I can follow you?
Sorry, I didn't understand.
There's
Huh?
any if there's any social media or some platform that you
Twitter? Twitter?
can connect.
You can follow on the Twitter. Sarah is on Twitter. The perspective trader. I repeat, Sarah is in the perspective trader, and is one of the rare account I follow. So you can find them on my Twitter account, or if maybe you follow her, and you can see on Twitter. Okay, and even though we will share the stuff and we'll keep in touch. So if you have more accurate question or more detailed question, we will answer after the classroom if you don't mind. So
I have a question.
yes,
Please, in regards to the biases that we
yes.
just discussed, the mass psychology, the embracing the mind, everything in regards to the biases, do I really need to change my environment if I notice that it's my environment that is causing some of these problems?
Sarah, this is a question for you.
The importance of changing your environment to improve your mindset, let's say, is that the question?
Exactly.
Okay, so I'm gonna start with this fact. We are animals that have to interact in a society. We are influenced by our environment, being people, being situations that happen to us. We are influenced to all of that. So we can't isolate ourselves in a bubble and live. Like, we need interaction. And if you are in a bad environment that pushes you down and that brings you low vibrations, and let's say, for instance, your friends are always saying, why are you in that Forex thing? Why are you in that trading? Why are you still insisting on something that is not giving you results? This you might not notice at the time, but this plays low energies on you. And when you are in this long and tough process, you really don't want to have nothing that pushes you down because it's already hard enough. So if you are in an environment where nobody supports you, and you're the only supporter, yes, it's true that you have to be your biggest supporter. You have to be persistent enough to lower the noise around you, but you have to surround yourself with good stimulus. So the other day, I had a guy on my DMs saying that I can't, like the perceptive trader, I can't really get out of my environment. How can I do this then? Maybe you can't pack all your stuff and get out of your house. Maybe you can't cut the relationships with your parents. It's normal. And if they are bringing you down, and if you're still depending on them, you can't just leave. What you can do is lowering the noise of these bad stimulus in your life and trying to connect then and to higher the good stimulus. And the way you do this, unfortunately, you have to do this online many times. The most interaction that you're going to find is online. And Twitter is a great way to do that, because you are not only watching images like on Instagram, and like it's much more superficial on Instagram. On Twitter, you really have people that support you. You have people giving you free advice. You have people ready to answer your DMs. You have a great stimulus, and it's a great way of surrounding yourself with good stimulus. And I mean, it's online. We always try to do these Zoom sessions. I mean, Florian has been busy with this already for some months ago. And this is really important. The fact that you are attending to a classroom that tells you that it's possible to be profitable in trading, and it's possible to make a living out of this, you are already having a good stimulus. So the more things you surround with that push you up, that make you think it's possible, the better. And it's basically this.
Yes, she's right. Oh, you okay with the answer from Sarah? No?
Are you alright? You know, we say, you know, with him.
Yes. Yes. Hello. Yes. There is a problem with the micro, I think. You have a question? Yes. Ask it. No. So, what I suggest, if you don't have any question anymore, is to well, it was this classroom. I'm going to make a little summary about what we talk about. So first, the market is trading is it's first a real business. Like any other business, you have to invest in yourself. You have to invest money. You have to pay things before making money. Like you have to you consider when you enter a trade. In fact, you are a net loser because you will incur trading costs. Like a trading cost can be the spread, the bid-ask spread if you trade to forex, or the fees to enter a stock, and an embedded liability if you make money, so you will have to pay tax on that. And there is the slippage cost. Slippage cost. So I have backtested my trading system, and I consider every direct cost and indirect cost, like a slippage cost, but I have a slippage cost of 0.25%. You have to consider everything. So you're a net loser. You have to consider that you have to lose in order to win. First, second, this is a counter nature. This is a counter nature world, a world of paradoxes. What works in the real life doesn't work in trading, like not sold, not lost. I maximize my hit ratio. I prefer to have 80% of winning trades versus 20% of winning trades. Okay, no, it doesn't work like this. You have to consider all the components of your trading expectancy, and you have a specific ecosystem you are in. Is that the market will maximize your weaknesses and put a downward pressure on your strength. And you have to consider that you have cognitive and emotional biases. Cognitive are error of processing or memory, problem of memorizing information, and wrong processing of the information the way it goes to you or into you. And there is the loss aversion bias and the confirmation bias. The loss aversion bias is the most detrimental bias to your success in trading, because we fear loss, and by fearing loss, we don't take our loss. And in fact, by fearing loss, in fact, we take more loss than we should. So you have to consider that the market is a zero sum or a negative with the trading cost, tax liabilities, slippage cost, and you have to consider to do what the losing traders do and not doing what they do, and doing what the winning traders do. Okay, there are all winning traders have the same common features. Whatever the strategy, whatever the market, they have the proper mindset, and they know that they have a statistical edge, like in a casino. So, like Sarah said, that you can't rely on 4 consecutive trades. You can't rely on hundreds and hundreds of trades per year of or in an entire 10-year or 20-year trading career. Okay, and after that, Sarah explained to us that this is not the event, the problem, but this is the way we process information. And sometimes, and she said that memories can be really confusing. And if you keep reacting the same way to the same kind of event, you are in the wrong way. You have to adapt, especially in trading, to an ever-changing environment. And you have to consider that you are the only person that can change. And paradoxically, market is an ever-changing environment, but you can change. You won't change the market, you can change. Like in your daily life, everybody wants to change other people. Like, I want you to listen to me. I want you to love me. I want you to help me. In fact, you can't do much about others. You can accept that this guy doesn't love you, that he doesn't agree with you. I really don't care about what people think of me, because I trust myself. But I'm not arrogant. I rely on others, but not that much. Okay, the market is the same, and you have to your biggest competitor is yourself. And Sarah explained that this is either a vicious cycle, like you repeat the same thing again and again, or you put yourself on the good track by being in a virtuous cycle. Like she said, you assess the problem. Like she took the example of overtrading, and you change what you need to change, and you assess the risk and the reward of not doing things that you should, etc., etc. And you work in like in a routine world mode. Sorry, and by journaling, by diarying, by accepting that you have to change, and you have to, like she said, enter a community who will help you. We will not judge you. We will accept your question. We will help you for free sometimes. And effectively, if you are in a stressful or toxic environment and nobody is supportive in your trading journey, it will be harder than for comparing with other, for which it's easier. Okay, like never forget that you are in a zero-sum game. So if you don't work the right way, another guy or another woman will make that and will steal you. Okay.
I have a question.
Yes.
So Sarah, you already know.
Hey, how are you?
Good.
Nice to see you here.
So this is Charisma, and I have a question. So you already kind of know my journey, obviously, but I messaged you this yesterday, but I'm struggling with, like, like the process I've made, like I've been doing my shit, but I'm still in that belief factor of, like, I can't see the end, like the end goal. I mean, I can't see the end because I never made money online like that, so like I still have that belief kind of system of, like, not is this real, because obviously I know this shit is real, but I'm kind of getting scared as the farther I go, because I know I'm capable of, I know I'm almost there with we worked on my trading nets for the past 2 months. So I know, like, and you validated, like, you've got it. So how do I kind of, like, how do I start to believe in myself, even though you've already validated that, like, I'm struggling with that.
Yeah, it's kind of, I know what you're going through. And for those who doesn't know, it's one of my students, and it's all about self-belief, because if you don't have it, nobody gonna have it for you. And the ways you can develop self-confidence is, I would say, one of the most important ways is talk with people with already are making it. That so when you see other people making it possible, you know that if others can do it, why can't I do it? Why I have no problem with myself. So if others can do it, and I see some people doing it, why can't I do it? So this is, for me personally, the thing that can make you more self-confident than ever. And then in the beginning, it's always difficult to believe in yourself, because we grown is in such a closed environment and society, and we are used to, I mean, you lived the biggest part of your life with these beliefs that go against your trading, and now 1 year or maximum 2 years ago you arrived to this field, to trading, and you see yourself in a so overwhelming environment. So it takes time to digest what you need to be a profitable trader. It takes time to build self-belief in you, to think, okay, so now I no longer want to have then that job or whatever. Now I want to head in trading and be successful in this. And you have to build this self-belief. It comes with time, it comes with experience, it comes with confidence that you're adding in the right direction. When you know that what you are doing is the right stuff, when you are confident about that, you are confident that it's just a matter of time until you succeed. Because if you're doing the right things, if you keep consistency in your actions, there's no reason for you to not have consistent results later. But it's a process. And I think that the more you walk this process, the more self-confidence you're gonna start to build, start to believe.
Thank you.
That's it. That's it. I don't know if you want to add something, Florian.
No. It was an interesting question, and this is a real challenge to master trading. In fact, every time I have what used to be a free Zoom session, 1 hour Zoom session. Well, they are paying now because people don't honor the schedule, and I waste my time proposing time slots to people. So now it's paying, but it's not the problem. Everybody asks me a question: oh, can I progress in my trading? I have this strategy, I can make it. And every time I say, I just listen, and there are paradoxes and contradictions. So you say that you have this strategy and you don't follow your rules. You say that you want to make money and you bet 5% of your trading account on the market. You say you're consistent, but you have no routine. You say you have an edge, but you didn't backtest it. So it's really obvious for me to give you, like I said in Twitter, in 10 or 15 minutes, the reason why you fail. But I don't judge you. But if you want to change, you have to do the work. Okay? Exactly. And what can teach you, Sarah? What can I teach you is that from experience, I know I went through all the stages. I made all the mistakes a trader can make in order to be profitable. So I know what you are making, the mistakes you are making now. I have made them. I feel that. So I can leverage. You can leverage that if you listen to others who made the thing. Okay. So there are not good mentors. There are only good learners. Okay. It's my credo. So thank you to everybody, and thank you to Sarah. And if you have any question, don't hesitate to ask Sarah a specific mentorship program. Many things to teach you.
I think we still have some part, like technical part to present.
Technical part.
Remember?
You know the
Can I
shots.
say something?
Yes.
Starts part.
Can you guys hear me?
Yes, we can hear you.
Hello,
Yes,
how are you guys doing? How are you?
yeah, thanks.
Hello.
And you?
I just want to keep going with like what you guys were saying about like the journaling and all that, those things. I feel like when you're journaling for like say a year or running spreadsheets, you honestly see that every mistake is your own mistakes. Whether it's, you know, leaving a loss too big, or like you said, taking too many trades. Like you said, you only take 10 trades now instead of like 80, and you realize like you could really cut out all those mistakes and then really focus on what you're doing well. So like all that like tracking and writing down really will help you. And like if people aren't even doing that, then like they're probably not going to get anywhere far, you know, like pretty much.
100%.
Because I feel like over time, like in the beginning, you start tracking, then you realize like, okay, like I'm taking too big of losses, and then everything's a habit. Like it takes a while to like cut out those big losers, and then you realize, okay, like for me now, it's like catching good trades and then not over trading. But like I cut every loss, so you know, like that's something that I left in the past because it wasn't serving me in my journal or my spreadsheets or whatever. So yeah, I just wanted to say that.
Yes.
Yeah, 100%.
Yes, interesting. But yeah, there is something there is underrated, and we make you know, like training is wow, the graph is different. This time is different. I mean, it's not different. It's it is a specific feature of like I don't know, your job, and there in every field you have a jargon, you have a specific skills required, and the trading must be different because people think it's different because there is money involved, emotions. You see, you know, shots that look like Christmas trees, and you think that you're going to be the king of the world in 2 days. And you see people with Lambos, beautiful girls next to the swimming pool, but it's bullshit. It's bullshit, and you have to consider like being a pianist, professional football, soccer. It's exactly the same. But people think that in 2 weeks it's okay, I'm going to make $1 million per year. No, it can take you 10 years, and even if you work 10 years, you can not make it. But I encourage everybody to learn, but you have to learn and work. And you know, now I'm learning Latin, you know, the dead language. I love the grammar. I love you can read you know, books that were written 2000 years ago, understand better our world. And so I like this dead language, and I won't speak with anybody Latin, okay? And I won't tweet in Latin because if I tweet in Latin, everybody will leave my my community. I don't want that. So you understand that I'm learning Latin, but I'm a rookie. But it's really hard. I'm starting, you know, with the conjugation. I used to make Latin to learn Latin when a student was in the high school, and I loved it. I have bad grades, but I loved it. Okay, and now I learn conjugation, grammar, and the more I work, the more I understand. But I know that it will take me 3 or 4 years to be able to read a Cicerone or Cicero, or don't know what to say in English, or Caesar's, or Marco Aurelius, or you know. And but I will because I have the eternity for doing that, and I will read Latin. I will, and I don't care about what other things about that. It's my pleasure, but I know that it will take time, and it's like trading. And when I say on Twitter, learning a language, if you want to speak fluently Chinese, it would take you 13 years. For the average Chinese child, it takes 13 years to speak fluently Chinese. If you want to speak fluently French, making no grammar mistakes, okay, it's the same. And in trading, you can't be an average speaker. You want to be fluent. And to be fluent is not being perfect, but you have to understand what the market tells you, and it takes time. But it took me about 12 years to be consistently profitable. Okay, but I'm consistent.
It takes time to build data and like see what works and what doesn't.
Yes, exactly. It's a trial and error process. But I was slow learner. I'm still a slow learner, but I didn't give up. And I smashed 8 trading accounts, but I didn't give up because I thought to myself, yes, I was looking to trend followers, and I watched to the turtle traders, and they just look at price because on the future market, the open interest is not the same thing as the volume on the stock market, and they just use the price, and how come that Ed Secota, or even if he went to the MIT, will be better than I? Why? Since he just used the price. I can be stupid and be profitable. So I went stupid. I didn't give up, and it worked. But you have to learn and focus on what works and what doesn't work.
Yeah.
Understand? And you can. Everybody can. Everybody can.
And there's so
Everybody
many steps. There's so many steps to like just taking a successful trade, like having the same position size every time, knowing where you're going to get out, like knowing the psychology of the market in the moment. So it's like you have all these steps and you have to do it 100 times out of the year consistently the same way. But people don't have all those steps even put together, really. So it's kind of like just a mess.
No, they don't understand. I worked in a private equity fund at the beginning. I was in a private equity fund. I met hundreds of people who created the business, in software, technology, biotech, everything. And we don't care about the product. We care about the guy or the woman who have the right team and have the right vision, can adapt to an ever-changing environment. A company can't make money every year. Sometimes it can't, but it's changing, okay? And you have to understand that the real problem in trading is that it's like the crack or a drug. Drug. There is you are addicted right from the start because there is pleasure, there is suffering, there is pleasure, there is suffering, and you want it again and again and again and again. So it works on the wrong side of our brain. So you have to get off the drug addiction mode and to go on the bright light. Like money, yes, it's good, but it's not the only thing. You can be a better guy, a better woman to understand you better. You can understand other better. You judge the other not like you used to do, etc. So for me, it's a real human. It's the challenge of my life. I don't talk about money. Yes, money can be a real motivation, but not only. Okay. No.
Yes.
So we have to keep sharing those things. You have to keep asking questions and don't give up. Don't give up and follow a practical mode. I think Sarah is more practical than I, more maybe focused and structured. And I can speak a lot. But it
seems.
Sorry. You have to have a method. You have to listen to others who know the thing. Not every. I don't know everything, but I know what works and I know what doesn't. Okay. So yes, you wanted. I don't know if you want to see. Yes, we put with our some shots. Like, yes.
We had some charts to show you more the technical side and the way we see our technical view. Florian, I don't know if you want to do it now or if you want to. I don't know because
I can make a comment. I'm not going to analyze, but I'm going to tell you a few things and to leverage what we learn on the psychological part, taking an example from the technical part, and explain that my strategy, but on the psychological, with a psychological prism, okay? And maybe people are still okay to for that or no? Yes? No. Okay. So just I'm going to tell you what I do on the market. Okay, but we don't care. But I'm going to see that we're going to see that a shot is just the expression, the way the mass is telling you something. Here is a chart, and there are thousands, sometimes millions of hands or people, funds or whatever who exchange this asset, which is a stock. It can be a forex pair, like Sarah play here, and it can be a stock. And you can see that this is a harmonious structure. And in fact, it's really what I do every time there is an opportunity. I like to see a stock rising up first and showing the way it can act in the future, because volatility, recent past volatility, is a good indicator of the future recent volatility. Okay, so it rises, it make a base, consolidation base, where people try to be patient. Sometimes weekends leave the boat. Sometimes hedge funds or funds, accumulate positions. Like a fund takes sometimes weeks to a fund to accumulate a position, and they have a committee. They are not only like we are retail traders. They are in a collegial way of thinking. They say we have to accumulate these stocks at 1.20, 1.25, but not more. So you can see the tracks of hedge fund or funds with this tight consolidation basis. Okay, and we say tight consolidation because there is no not upside move, no downside move, and there are tight zone. Okay, so it's a good way to, when you have a erratic chart, it means that there is confusion. Like you don't like confusion in your life. You don't like to see confusion in others speaking, and it's the same in the chart. Like a chart is like one single person, but which summarize the least resistance, the line of least resistance, like Livermore said. Okay, and now what I like, I wait that the stock breaks out in huge volume. Like here, I went in the boat here, and after that I have a strategy to exit, but we don't care. But you can see that it starts rising, and now again there are some hesitation, but it starts beginning a downward movement, but controlled downward move, like a little downward move, and you see that the volume is decreasing, and while the price remains in the same zone. Okay, so it means that there is a strength. If it doesn't go down, it will go up, or something will happen, and it happens when it breaks out the base. You have better chance that the stock will resume its trends, and if it goes, it breaks in the sense of the in the sense no, not in the sense, but in the direction of the trend. Okay, so if you average down, you play against the natural way of things happen in the market. Okay. So I love to be the last to buy a stock because I know that there is enough strength. So there was an example of the mass psychology. So I don't have any indicators. I don't have any moving average. You know why? Because indicators have lagging indicators. They are derived from price or volume, RSI, stochastic, MACD, or whatever. It can be good, but you have to show me that there is an added value to add indicators. Every time I ask that to traders, they come back to me and they say, "Oh, I get rid of all those indicators and my trading is better." It's just it's not me, but we tell that. So I'm going to challenge you if you use your indicators, because simplicity is really difficult, while complicated things is really easy. And brokers invented all those indicators. There are 50 or 60 or 70 indicators. And every year there is another name of a new indicator. Yes. Why? Because brokers like you to trade, and they want as many indicators, like as many, possibility of making bets in a casino. It's exactly the same. So that is my thought. Okay. So I love to have a story. It's not perfection. I don't care, but I know that if a stock I want to keep to take a massive move from 1 to 4, for example, here the big part of this trend, I have to accept that not only the stock to go from 1 to 3 has to go from through 1.5, 1.6, 1.7, etc. So I follow the trend, and you can't. There is no single trend that doesn't start with without a breakout. Okay, you can't miss a trend if you take all breakouts. The real problem with breakout strategy like mine is that there are many breakouts that fail during the day. So I had a solution for that. I play only the closing price. So when everybody got killed trying to catch breakouts, why did I? Because I was watching. Why? Because I trade penny stocks or poor fundamentals, and I really don't care about what people think about penny stocks. I love penny stocks, and but I can be on GME or MAC who can trade at 30, like Jamie in 2020. But they are not really penny stocks, but they are poor fundamentals. But I don't care about fundamentals. Like I know how to read the income statement. I really can read that. But fundamentals are lagging indicators, and I don't like lagging indicators. I want to see truth, and the truth is the price. The price is the leader, and I follow the leader until it's time to quit the pack. Okay, so it might be a summary of what we talk here. I have a strategy, I have a system, I have backtested it. I don't use fundamentals like many traders can use, and I trade the price, and I know that I had weaknesses. I had to work on them. So I decided to play only the closing price because I have backtested my system on the closing price. So I don't care about trading in intraday. Okay, and okay, it's really boring because it happens that I don't trade during one entire month. I don't put one single trade. So you say, oh, it's boring. Yes, it's boring. It's boring. So I work on many other things during the day, backtesting my edge, mentoring people, learning Latin, etc. And I wait patiently till the end of the trading session. Is it good? I don't know, but it's really good for me. And it's simple and grounded in the grounded in a rational way of seeing things. Okay, so I have it was my last word. So to say that a chart is not that complicated, and you don't have to overcomplicate things. Sarah, you want to share your insight on some of your charts you provided in this content? No?
Yeah, just a quickly insight about how I see Forex. Now a little bit about Forex and my way of analyzing. And the first thing I want to tell is price follows liquidity. I'm talking about the Forex market, follows liquidity. Whenever the market there is the biggest amount of liquidity, price gonna go there, gonna take it. It follows liquidity. That's how it works in the Forex market. So the day begins. This is the intraday pattern, and this is what I constantly look day by day in my day trading for. This pattern, always the same, and there are many variations of it, but it's always the same principle. So the day begins, I mean, for European people, begins the day with an accumulation phase, which is the Asian session. The Asian session is characterized by being small range. It can be consolidation, usually less than 50 pips. And what happens in every consolidation, being in every time frame, is when there's a consolidation, there's an accumulation of orders. Do you have a question?
No, I think there is a problem with you can mute your, I don't know, mute your. Okay, go on, Sarah.
I think the stop hunt, like,
yes, I'm going to mute.
Being patient for the stop hunt is huge. Like once you figure that out, like you could catch better moves.
The stop hunt is everything. And
Yes.
the thing is that you want to, I mean, for me, my strategy, I want to spot where the stop hunt is. So what happens after the accumulation phase, which is the Asian session, is that normally retail traders, which is the mass, they build up orders. They build up orders below the consolidation, below the support, and above. And the way they do it is they want to trade, they want to long the support and they want to sell the resistance. So they need to put their stop losses. So the stop losses of a buyer that
You
wants
know where
to
they're
buy
gonna be,
the
their stop
support.
losses are gonna be.
Exactly.
Pretty much.
So when you spot, when you know where the stop losses are, you wait for the stop hunt to happen. And here's the thing, the stop hunt can happen below or above the Asian session. You don't know. And you have to understand what direction you want to trade in that day, and that is seen on the higher time frames. But on the 15 minutes, which is this chart, the intraday pattern, you want to look for the stop hunt. So if you want to sell, you want to look for a stop hunt above Asian session. If you want to buy, you want to look for the stop hunt below the Asian session. And price is tricky. Sometimes it's going to go below, sometimes it go below and then up, and then you're trapped. And so market makers, which is the majority of the brokers Forex traders work with, they really don't have a way to, it's complicated. They are mostly market makers. They take the other side of your trade. And what they want to do is trap you, because if you win, they lose. If you lose, they win. So they need to win. Obviously, they're not going to let you win. So they need to build up liquidity so they can use that liquidity by grabbing it with these stop hunts, with these rapid moves, and really shutting it to the other place, and the real move begins. The real move of that day begins. And so one of the characteristics of these stop hunts is the candles. It's the rejection candles you see, big wicks, dodges, engulfing candles, rejection candles. And there's the next example. You can pass the slide. Florian, please. Thank you. The next,
No.
Yes.
You see, this one.
Yes, this one, exactly. This is the same thing happening. It's the same principle. It's a bit different, but we want to look for the stop hunt. Sometimes there's a return to the stop hunt, and there's your opportunity, but that goes beyond of the scope of this class. So what you need to know is that the beginning of the day, Asian session, consolidation. After that, you want to look for the real move. The real move can occur to the downside, to the upside. You want to have a directional bias to understand that. And then the next pattern that I want to talk about is the intra-week pattern. And as you might know, price is fractal, meaning everything that happens on lower time frames or in any time frame happens on higher time frames as well, just equally. So what happens in the intraday time frame is that we have the accumulation, we have the fake move, and we have the stop hunt, and then the real move of that day begins. Intra-week, this is the 1 hour chart that we have here on this slide. Intra-week is exactly the same. We have the accumulation phase, first Asian session with the boxes, and then we have the fake move. The fake move induces sellers. They're gonna sell. They want to sell. They see momentum. They wanna sell this move. And when they wanna sell, boom, a big push up gonna happen, and the real move for the week begins. It begins. It goes on Tuesday. It goes on Wednesday. When we arrive to Thursday, market makers need to balance their books. So what happens is a reversal day. As you might notice, each of these days inside of this week, they have a stop hunt. Tuesday, we have a stop hunt below. Wednesday, stop hunt below Asian session and opposite move. We arrive on Thursday and the stop hunt goes on the opposite side. So this is the reversal day. The high of the week is formed, and on Friday, typically, price comes back to the weekly range and it enters in consolidation again to start the following week. This is the main template. This is the main pattern you want to look for. This happens on a 4 hour, on a 1 hour, or on the daily, whatever it is, because price is fractal. This is another example, a little bit different. It's the same principle. Not always a stop hunt gonna occur below or above the Asian session, but that's another variation. The main thing you want to look for is for the stop and it typically occurs behind the Asian session. There's another example, just to illustrate. Monday we have an accumulation phase, beginning of the week. Tuesday price creates the low of the week and it keeps going on Wednesday. Thursday high of the week. Friday comes back to the weekly range, ends up in a consolidation. So the real move typically Tuesday, Wednesday, Thursday occurs, and that's where your swing trades might have to be basically that. Yeah. Just be aware of fake moves.
So you're pretty much looking for longer term moves, and then your entries are based on like not getting faked out and getting the best entry you can.
My
smaller time frames.
My style is day trading, so I'm looking for the 15 minutes, always aware of the higher time frame biases that I have. If I catch the move in the beginning of the move, if I catch the trade in the beginning of the move, I want to hold that trade during the next days. So let's say I take the trade on Tuesday. I want to hold it on Wednesday. And if it's possible, if my trade management, this is very important, if my trade management tells me to still hold that trade, I'm going to hold it until it's until my final exit signal appears. But if I catch that trade, my stop at Thursday, and I know that on Thursday the reversal might be incoming, and depending as well on other confluences, I just close the trade in the same day I open it. But
so yeah, it's based on the environment pretty much for you.
Yes, like you really have to know your higher time frame biases, and then the 15 minutes, it's just all the same.
Yeah, because sometimes they'll keep going for 2 or 3 days, or sometimes it'll go for a day and then reverse the same day. Yeah,
depends a lot. It depends a lot. There are a lot of signals that you can rely on, but I mean, the main template, it's a thing that you can save, because on Mondays the move is usually fake, and I mean, it's not that you can't trade Mondays, nothing like that, but just be cautious and be aware of the higher time frame inter-week pattern, because just position yourself in the highest probability side. And that's it, guys. That's a little bit of my strategy, a little part. If you have any questions, just reach me. I have no problem in answering. I think Florian the same, pretty much.
Yeah, well,
I have a question.
Yeah,
it's for Sarah, right? That's your name?
Yes, exactly.
So you're pretty much, from what it looks like, you're not taking many trades a week. Maybe like 3 or 4, or 2 to 3.
I mean, because I trade all the majors, I get some more. I get, let's say, 5 to 7. I mean, it depends a lot, because, for example, this last week I only got 2 setups. So it depends a lot, but usually 5 to 7 trades, I would say, per week, because I trade all the majors.
Do you trade dollar CAD?
I mean, no, that I said all the majors, but I don't trade dollar CAD because I don't like that pair. But this is just me, because this pattern happens all the same, and you can see it. The Asian session for some pairs are bigger, because some pairs have the GPY, some pairs have but every pair is a different personality, and you have to adapt this pattern to the different pairs. So you can't be stuck with this idea. Okay, I'm gonna backtest this. I'm gonna find this pattern exactly the same, exactly this template.
Yeah, no, because the spreads are different, and the fastness
exactly.
are different.
So you have to be a little bit. So I like to see a consolidation or less than 50 pips on Asian session. But if I'm trading, for example, New Zealand USD, Australian dollar, I'm open to see a bigger Asian session, because those pairs evidently have
so you look for like a wide range for a possibility of like people getting stopped out above or below the range, pretty much.
My reference point is the Asian session. I wake up for London, and that's where my trading day starts. And I look for my setup on London, maximum hand of London, but I don't really look for setups in the New York, because London is where I specialized. And I have my Asian session there already for me to have my point of reference. The stop hunt, I'm gonna look for it. I have a couple of confluences that tell me what it is a stop hunt. If that move is a stop hunt. Sometimes the stop hunt has obvious rejection candles, huge wicks. Sometimes it doesn't, but it still is a stop hunt. And the thing is, you want to see the stop hunt happening, and you want to enter on a return, or you want to wait for a kind of return. So there's a lot of ways to use this pattern in your trading, and yeah, it's basically this. I can't cover them all. Maybe we can do a further Zoom session. We'll see.
Yeah, because I realized, like, when I first started trading, like, I would always be right on direction, but it would always just stop me out. So, like, over time, you realize, like, if you just wait for that stop hunt, or maybe like take a small cut and then get back in, then like it could work out. You could catch a big move, like a 4, 5, 6x.
It's all about the timing.
Michael, you must you have to tell me after the classroom how you are in your training journey. I will.
Yeah, I will.
Yeah,
for sure.
So we're going to stop because it's been
too long.
Nearly 3 hours. We are talking, and the session is recorded. So we will broadcast it. No, how do you say it? We will share it, and Sarah will put the presentation on our website. Me also, and we can talk about specific points if you want to ask more specific question relating to your more specific trading experience. Okay, so don't hesitate to ask question, and to Sarah and or to me. And thank you to everybody, and see you for the next classroom. And for me, the next classroom will be in February on the backtesting thing, and I will share my stuff how to backtest rigorously your edge, to understand what an edge is, what a statistical approach to trading is, and I think a very important topic also is backtesting, because every thing comes from the confidence you have in your edge. And the backtesting is the first step, in fact, I think.
That's it, guys. I hope you insightful, and if you have any question.
So have a nice day, nice evening, and nice morning. I don't know where you are in the world, and we keep in touch. Okay?
Thank you.
You're welcome.
Bye, guys.
Thank you to everybody.
See you next time.
Bye.
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 Amazing to hear this webinar.
Thank you very much.